What's up, everyone? Welcome to the daily macro update for Tuesday, September 2nd. We are now seeing the beginning of the next gold run, seeing that gold prices have finally, jumped out of this 4-month long consolidation period. And, this is happening at the same time where, you're starting to see some fears from the bond market of government debt getting a little bit out of control, as yields had a nice large acceleration as well. If we take a look at the 30-year U.S. government bond yield, I mean, this is nearly at 5%. Pretty much near its local peak from the past couple years here. As well as when we take a look at the 5-year break-even inflation rate, that also accelerated to its pretty much the same highs that it's been since mid-July, and getting close to where it has been pretty much since April of 2021. And so with inflation expectations rising, while at the same time Fed Fund futures continues to show that the Fed has a high probability of cutting by 25 basis points, that's really an environment for gold to do well, because inflation is going to remain sticky, even if it doesn't accelerate back to 9% levels like it did back in 2022. You're still going to have that persistent stagflation, and so that going on with continued tariffs that are stifling growth. This is just going to continue that stagflationary environment, which again, gold really just performs the best in that type of environment, right? So a rush to hard currency instead of fiat currency is what is happening. Having a little bit of an unwind of a lot of the month down markup here in the volatility index of the S&P 500. You saw a large spike up to 19. Since then, it's had a little bit of a come down, and there's a lot of opportunities this morning for buying dips. So hopefully you weren't panicking. Our group in particular, we've been raising cash over the past week and a half or so, and so this was all a great opportunity for us to scoop some things up that were on a discount, preferably at the low end of the trading range on lower volume, and so that's what we were doing here this morning. But yeah, gold breaking out here is quite the signal. While at the same time, interestingly, we're seeing silver also have a pretty strong breakout, right? So base metals continue to, outperform in the commodity space as well as in the market in general. I mean, silver, gold, all have been outperforming the S&P 500 this year. Interestingly, for the first time since mid-February of this year, Bitcoin has actually gone bearish in our model. So if I did have a bookshelf behind me and it reflected the colors of the Bitcoin trend, it would be red, even though it still remains green because it's reflective of the S&P 500. So that still remains bullish, but very interesting seeing Bitcoin go to bearish trend in our model for the first time in a pretty long time, second time this year. So when that happens, you have to pay attention to that. And so also as well, I mean, when you take a look at net central bank liquidity, that had a very large drop off last week. So it's not surprising that Bitcoin, which is pretty, positively correlated to net central bank liquidity, followed with this large drawdown that's happening right now in net central bank liquidity. And part of the reason for this is, due to that month-end markup that we typically see in the RRP. So you could have a slight rebound, but with the reverse repo facility at 21 billion, that's pretty much drained. And you also have the Treasury general account near 600 billion. And the Treasury is trying to get this in by the end of September, up to 800 billion. And so if we take a look at that here, it has another 200 billion to go. As this rises to 800 billion by the end of September, that will put a further pressure on this downward trend on reserve balances, or not reserve balances, but net central bank liquidity. So I still think throughout the month of September, you could see some more downward pressure on the price of Bitcoin. But what's interesting at the same time is that Bitcoin miners, specifically the Bitcoin miner ETF WGMI, that continues to make new highs, and it's about to close. It's about to close on a new all-time high here. So that is very interesting, seeing that despite Bitcoin, losing some trend there, or losing its neutral trend and going bearish. Taking a look at the S&P 500, for those who are part of our daily index ranges updates, we posted this morning how we did have an opportunity at the beginning of the morning in the low end of the trading range, and that's exactly where it went to. And so, since then you're having a bit of a bounce off of the low end of the trading range. And so if you are not yet subscribed to that free newsletter, I would highly recommend taking a look at that. If you're on Instagram or TikTok, just go to the link in my bio. For those who are on YouTube, if you're not yet subscribed to that free newsletter, just click the link down below there. But yeah, this morning you had an opportunity at the low end of the range, and so there was a buying opportunity. If you were panicking this morning instead of buying, well, then you have to maybe reevaluate your process, and try and figure out a way yourself to keep the emotions in check so that you can mechanically react to these types of things properly. Or if you'd like to get a head start on one that works, you can take a look at our 7-day free trial of our macro investing community, which again, those links are down below. QQQ, again, had an opportunity at the low end of the trading range there. What I don't like about Qs is that it did put in a lower high right here, and so that is a sign of losing strength in its momentum, price momentum. It's not bearish, but that is an interesting sign that's there. And then lastly, we have the Russell 2000, or we can just go to the ETF IWM. And yeah, this didn't quite get to the low end of the trading range. It did have a little bit of a deceleration, but small caps, the Russell 2000 continues to be the out of those indices, the one with the strongest trend. So, it's interesting seeing how not only seeing small caps outperform in traditional markets, but also as well within the crypto space. You still have altcoins like Ethereum-based tokens, and Solana still continuing its bullish trend. Along with Bitcoin going bearish, you have XRP also going bearish. So both Bitcoin and XRP are bearish in our model right now, which is definitely different from what we've been seeing over the past several months. And yeah, that's pretty much all I'm seeing today. Decent pop in the dollar as well. The dollar is remaining pretty resilient. And so, if we do see an acceleration continuing above and it closing above that 98.8 for the DXY, you could possibly see the dollar go back to bullish, like it did very briefly back towards the end of July. So that's one thing that I also have a note of as well, because when you take a look at specific correlated assets, there's still a lot of assets that are oppositely correlated to the dollar that are remaining in bullish trend. And so with the dollar, if the dollar goes bear or bullish, that would obviously be a hit to those or a headwind for those continued bullish trends. Taking a look at the inflation nowcast from the Cleveland Fed, we just got the first nowcast for the September reading, even though it's only been a single trading day. That has pretty much inflation remaining where it's at, a slight deceleration in core CPI down to 2.9% from 3.0, which is interesting. We get inflation data next week. This week is all about the labor market, which the market is anticipating, and kind of has a little bit of a hesitancy from when we got the poor jobs data from last month. If you guys remember that, that's when the whole revisions freak out happened, and so that's what we're going to be receiving this week. If you guys haven't already, I would highly recommend checking out our Sunday macro wrap up from Sunday this past week, or on just a couple days ago, the 31st there, just so you can see a little bit more in depth on the inflation expectations as well as what to expect this week. But yeah, I mean, long end yields rising while short end yields falling. That is technically a bull steepening of the yield curve. And, when we see a bull steepening, that's obviously signs that the Fed is going to cut rates. But if you see this continue to accelerate because of a rise in the long end of the curve and a drop in the short end of the curve, then that could also be providing some inflation scares as well from the bond market. But taking a look at some of the macro data from today, we got the total construction spending for the United States. Now, construction spending is a great leading indicator. And so when we take a look at that, that actually remains negative at negative 2.8% year over year. And so that went negative all the way back in February of this year, and continues to remain negative, although it has stopped decelerating pretty much around April of this year. So, it's pretty much hanging out around this 2.8%, negative 2.8%, negative 3% year over year. What I like to look at specifically, though, is private construction spending, because that's giving you a little bit more of a feel of, what actual, private demand is of new construction homes. Whereas, just looking at total construction spending as a whole, you still have the public sector, government buildings as well. But, taking a look at this is a lot more, deeper negative, around 4.6% year over year. It hasn't been this negative really since January and February of 2019. And then before that, it was around that during the 2008 Great Financial Crisis. So, yeah, new construction in the United States not having a good time, despite development stocks, though, still holding up pretty nicely. And then private construction for residential does remain negative as well at 5.3%, negative 5.3% year over year. The bigger metric from today was the ISM manufacturing PMI, which did have a decent acceleration, but it still remains in contractionary territory. So that is U.S. manufacturing. When we break it up into its new orders component, you did see a large acceleration in new orders. We really haven't seen an acceleration like this since the front running of the tariff scares back early in January of 2025 this year, post-election. And so I'm curious if we're starting to see an increase in new orders on the basis of further anticipated accelerations in tariffs. So I am looking at that, which is interesting, because we had a lot of contractionary reads for new orders back here as manufacturing prices continued higher, but with prices paid getting a little bit lower, still way above an expansionary territory. I wonder if a lot of these different firms are also taking advantage of the slight break in prices, expecting them to go higher. So we'll see what happens with that. And then also ISM manufacturing employment continues to be deeply in contractionary territory. So, I mean, seeing that, there's still some signals that could contribute to the Fed cutting. But again, it's just a weird scenario where you have a weakening labor market, you have tightening central bank liquidity, or decelerating central bank liquidity, still ample in terms of levels, I guess. And then you also have prices rising. So pretty interesting environment here. And then we also got the Real Clear Markets Investor Sentiment Report, and that went from expansion in August back into contraction for September here. So that is definitely interesting. But the big one was the ISM manufacturing PMI, which again, the entire report was showing a contraction. But if you take a look at the table here, let me see if I can move my screen for a second to the other side just so that you can see. There we go. So taking a look at this here, you can see that new orders is growing from contraction. But again, I wonder if that's only a 1 month trend. I wonder if that's getting ahead of further tariffs. You have production contracting, employment contracting, inventories contracting. Customers' inventories are too low. Prices are increasing, yet at a slower pace for the 11th consecutive month. Backlogs of orders are contracting for the 35 consecutive month. And so overall, we're seeing a continued contraction in the manufacturing sector, yet it's at a slower pace, which has been going on for about 6 months so far in 2025. Six consecutive months of contraction in the manufacturing sector. All right. So that's what I'm looking at here in terms of the macro data. And yeah, with that, we can go ahead and take a look at any of the questions that you guys might have. Welcome to the show here. Let's go to some of the questions on YouTube first, and then we'll go to Instagram, and then we'll go to TikTok here. So Seth Williams asks, do you all buy physical gold, or how do you actually hold/buy gold? That's a great question, but you can do both. So, I'm not a financial advisor, but for myself personally, myself and my family like to hold both paper gold to take advantage of these large upswings from, from what you have in the portfolio, as well as buying physical gold. So yeah, I personally do both. But let me fix my screen here. What tips maturity do you target if you're wanting to expose for stagflation? Well, I mean, if you want to look at bonds that are typically in a bullish trend right now, then you would look at kind of the mid-tier bond opportunities. So something like IEF, right? So that continues in a bullish trend there. But if you go down to something like TLT, which is further down to the long end, that is definitely a different chart, right? So that is clearly not in a bullish trend. And then if you go to TIP, again, that provided an opportunity there at the low end of the trading range. But yeah, I mean, I don't necessarily, buy bonds directly from the Treasury. I typically just buy the ETFs. What yield will the Fed step in to fill demand and use QE? Well, they wouldn't do that if bond yields continue to rise. If they continue to fall, specifically the 10-year bond yield, then I'm not sure which level, just because we're in this post-pandemic environment. So there's no telling, which level the Fed will step in. Typically, it's when this is completely crashing, though. So if we go back in recent examples, all the way back in 2020, I mean, when they were stepping in around, when this was at 86 basis points. So it would have to crash a lot from where it's at right now in order for the Fed to step in with actual, quantitative easing measures. But again, they don't necessarily need to do that. They have other measures these days as well. SoundHound had a nice pop today. Yep. Yeah, a lot of these different AI stocks are, having a decent run here and had a little bit of an opportunity. But yeah, SoundHound, remains one of the ones that is in bullish trend. Is BRK.B bullish in your model? Can you show target ranges? Sure. Yeah, so Berkshire is in bullish trend. And it's at the top end of the range, so, definitely wouldn't be buying it here. But the low end of the range is around, the zone is between 488 or 489 and 486. All right, let's go on over to the Instagram comments here. Gold had a massive run today. Is it because of the bond situation globally? Yeah, I mean, it's something where gold is effectively pricing in a huge mistake between what governments and central banks are doing right now. So, yeah, take it as a signal. Silver is also bullish trend. Bullish dollar with impending rate cuts. What gives? Again, going back to policy mistakes. This isn't something new. I mean, we saw something similar. If we go all the way back to, let me see here. Yeah, so I mean, this isn't something new, right? So someone just asked the question on Instagram, why would the dollar go bullish if the Fed is cutting rates? Well, we've seen this already, right? If we take a look at the DXY, all the way back when they cut rates last September, a year ago, what did the dollar do? What the dollar do? It had a 9% run after they cut by 50 basis points last year. And the reason why it did that is because both the currency markets as well as the bond markets were signaling to the Fed, you should not have cut rates. That was a policy mistake. No, no. And so what did the Fed do with that signal? It stopped cutting rates. So what do you think will happen to the Fed if the dollar as well as bonds continue to go higher from here? It's probably going to not cut rates anymore. And then you're going to have a complete rejection from, the current bullish assets that have been, anticipating rate cuts. So again, this environment that we're in right now, it's not as simple as people think. Like, oh, cut rates, we'll go back to normal. Absolutely not. Any insights in AMAT? They make microchip wafers. Vino, that's a great question. But this is a macro channel. It's called macro optics, not micro optics. So a lot of the micro type of fundamental analysis on some companies, I may not have done. My team and I do have a fundamental analysis process for companies. But yeah, a lot of these things I just don't have, fundamental research for. And so, you might know way more than me, but what I can tell you is where it falls, within our process here. And so, looking at this ticker here, AMAT, I can already tell, just going back here, this has been making a series of lower highs and lower lows. So this is clearly in a bearish trend. But yeah, let me see. Let's take a look at volume here. Let's pull up volume performance. Yeah, so on this big sell-off here that you saw back on August 15th was on a huge acceleration on volume. This is definitely not a no-go this is a no-go for my team and I if we were to, look at this. But again, I don't know anything about this company fundamentally. So yeah, you'll have to take a look at that yourself. Hi, Johnny. What are your thoughts on GEV? GEV is technically in a bullish trend right now, but since it made a lower high right here on August 28th at the top end of the trading range, and then it put in a lower low here on accelerating volume, even though it's technically remaining in a bullish trend. This is not something that's on my list to go out and aggressively buy on this dip because of those reasons. All right. So, yeah. I would look at something like GEV and be like, I'm going to go to something else. What are the trading ranges for gold? Well, for GLD, the trading ranges for GLD have not updated yet because of it'll be updated tomorrow morning. But yeah, it completely broke through the top end of the trading range, and that's typically a huge signal when something does something like that. But yeah, um, yeah, gold, massive move today, massive move. Do you think there's a chance it won't even hit the low end of the trading range during this run? I mean, it can. Um, it definitely can. But I mean, this right here, this move in gold, you would not want to be chasing this, right? So you should not be feeling emotions with this, right? The time to get in was during um, this higher low on lower volume, continuing its bullish trend, right? That was the time to get in. If you did not get in here, you missed it, at least on this very short term pop. Okay. Do not, I can't tell you what to do, right? But our process says never chase this type of huge acceleration right here because, you know, you're just not giving yourself a good probability of upside there in the immediate term, right? It's always good to just remain patient if you missed it. But guess what? These opportunities, even if you did miss this initial pop, um, it's something where one, figure out the reason why you missed out on it. If it's something where you need more resources, you need a better strategy, we have our group for that. If it's something where, um, you know, you feel like you need to get in at these prices, you can do whatever you want. But I would just say, from my experience as well as our model, just wait for the next opportunity. I mean, just because you missed out on this, I would just say, zoom out a little bit. If you just go out, who knows? Maybe you just wait a little bit and then you're able to catch up on the next massive move up, right? The great thing about markets is that there's always another opportunity somewhere. And even if you missed out on one, never be bummed because there's probably there's another opportunity somewhere else. Is a pullback signal or bullish? I'm not sure what you mean by that. From here, if we had a decrease in price in gold, you would have to look at why, or you'd have to look at the context of the price deceleration, right? So if prices are coming down, what is it doing in terms of volume performance, volatility performance, structure? Is it at the low end of the trading range? If you take a look at other correlated assets, are they too in a bullish trend and having just a slight correction? And are they remaining in a positive correlation? All these things we cover in our community, but just like the old saying goes, it's not what someone says, it's how they say it. Well, it's not what's happening with price, it's how price is moving in the context of those other things, right? So yeah, never just look at price. You always have to understand the context in which it's moving. And a lot of the time, you don't need to be a huge market genius or someone who does this full time to do that. Because a lot of the time, you just have to look at what the market is currently pricing in. Is it still okay to buy gold and is it still okay to buy gold, silver, and I think you meant to say copper? Um, well, I just covered that, but if you missed out on it, don't chase. Be patient for a pullback. In the meantime, or in the meantime, look for bullish trends that are at the low end of the trading range. But yeah, I never said copper, by the way. So, copper, it had that huge drop off at the end of July there, and it hasn't really made any type of recovery, although it has having a little bit of a series of higher highs and higher lows. But this still remains in a clear, bearish trend after that huge drop. So I would not include copper um, in that group with gold and silver. All right. Can you look at Bitcoin and Ethereum? Yep. We already looked at Bitcoin. We can look at it again here. So, Bitcoin, those are the ranges here. And then for Ethereum, those are the ranges. Notice how Ethereum is having a price decline on decelerating volume, which is a immediate term bullish divergence. See that? All right. I appreciate all the likes on TikTok. I'll just take a look at one of these questions here, see if it's a quick one. Appreciate the likes and the shares. So if the Fed cuts in September and the dollar rallies because of bond market, do metals sell off in that situation? No, I mean, metals have been performing really well with that type of stagflationary signal. I have to squint my eyes because the letters are very small and I have this, light in front of my face here. The text on the TikTok is small. Jackhammer, late today, I missed it. Yeah, just go on YouTube and watch the replay. But all right, everyone. Well, that pretty much covers it for today. Yeah, huge move in gold. We'll see what happens later this week. If we just take a look at, let's see here. Let's go to the calendar. 1 second here. Yeah, tomorrow morning we have JOLTS, job openings and layover turnover survey. So the job openings report is tomorrow at 10. And then we have Challenger job cuts and ADP employment change on Thursday between 7:30 and 8:15 a.m. Eastern time. And then we have ISM services at 10 a.m. on Thursday, which I think is a lot bigger than the ADP or Challenger job cuts. The ISM services PMI is, essentially the biggest macro indicator that I'm looking at in terms of like the real data. In terms of the charts, it's the 10-year bond yield. And then on Friday at 8:30 a.m., we have the unemployment rate and non-farm payrolls. And so, if we see a rebound in jobs, then that would really put pressure on the Fed not cutting further, from here in September. Because, at the end of the day, if it's clear that, their long-term inflation average is still intact and the employment scares from the previous month are no longer there, well, then their dual mandate is still okay with price stability and full employment. And then if they did cut rates, then that would be a huge signal of fiscal dominance, which the market would not like at all, at least in the medium to long term. So yeah, I mean, big things tomorrow, Thursday, and Friday. Short week because of the Labor Day holiday here. And so, yeah, man, only one day down in the week and it's already Wednesday. How about that? But yeah, I'll see you guys in tomorrow's live stream. Good luck out there. And yeah, we'll catch you next time. Bye.